So if you thought about generational wealth, then you need to watch this. If you're thinking about how you're going to make your next car payment, you probably need to keep scrolling. Go ahead, keep scrolling. Most families lose wealth because of 3 leaks. Most big fortunes disappear by the 3rd generation, but the Rockefellers, this didn't happen because they use structure. Today, I'm going to show you a modern, practical version of that play for business owners, flippers, real estate investors, doctors, lawyers, and any kind of high W-2 income earner. If you only want to control liquidity, growth that doesn't depend on the market, and keep this thing into your system. So this isn't just a product, it's a thought process and a philosophy to keep control of the money and keep the money in the family. The Rockefellers built a simple system around properly structured whole life insurance. Also that goes along with that are trust, and then also a massive amount of family education, and a rule we can follow too, that if you can pay interest back to your own system and not a bank, you'll have more success. So the first thing is in this whole system is, number one, whole life is the cornerstone. Think of this. Think of high cash value, what they call dividend paying whole life insurance with a mutual carrier. This is the vault. This is where everything flows in and out of. And here's the thing, it's got a guaranteed death benefit so that cash and that vault move on to the next generation in a massively tax advantaged way. These policies have contractual cash value growth that you can access while you're alive. Now here's the thing, it's steady, non-market correlated compounding, meaning you don't have to have the market for this thing to keep growing. Step 2 in this process is they have trust to keep control. Proceeds and assets flow into trust, not straight to the heirs. The trust sets the rules. What gets funded, investments, education, business ventures, philanthropy, and like how loans and distributions work. It's more like it's intent over impulse. Now, the number 3 thing is they train the next generation. We hold regular family or partner meetings and review balance sheets. We understand the values, teach the system. Here's the message. Don't pay outside interest if you can recycle it inside. Number 1. Now, here's the next thing is you have to be your own lender. So if you need capital for a flip, equipment, a buy-in, or some kind of deal, borrow against the cash value from the trust. You repay the trust with interest just like you would a bank. That interest stays in your ecosystem while the cash base keeps compounding. The next thing is you have to have this thought. You have to play the 100-year game. So keep policies funded, keep trust current, and keep teaching the why. Not just this is how we do it, but why are we doing this? So we have to have long, big vision, long horizon, simple rules. We have to be consistent and we have to execute these rules. So most families lose wealth because of these leaks. These 3 things: low financial literacy among their heirs, taxes and legal friction, and interest linking to banks. Those are the 3 things. This system addresses all 3. Education's built in, policy and trust design help navigate taxes, and internal lending from the policies keeps returns circulating at home. Now this is not easy. This is a little complicated, but just bear with me. You don't need Rockefeller type money to start. Now here's the steps. Number 1, install the vault. Set up a high cash value whole life insurance. Let's structure this thing to where it bleeds into the next generations. Whether you have partners or whoever, what we're going to do is we're going to prioritize liquidity and then discipline. And we're not looking for max death benefit. We're looking for cash right here. Number 2 is write the mission. 2 pages of values, guardrails, what gets funded, what doesn't. The goal is this: keep capital circulating inside your ecosystem. The next step is we have to establish a trust. I'm not an expert in this, but work with an estate attorney. The trust holds policies, assets, and defines lending rules, approvals, and distributions. The next thing is, this is the hard part, and this is what I'm working on now, is meet annually. So review the family or the firm balance sheet, track the loans, celebrate the wins, and teach the next generation how it works. Next thing is we have to finance internally. Borrow against cash value from the trust. Charge interest to yourself, document the terms, and repay into your system. The next step is you got to grow the flywheel. You got to grow it. Reinvest the profits into more policies, more real estate, and operating more businesses. We have to keep the premiums funded and keep liquidity healthy. Now look, I've given you a lot of information, but I want to give you an example. So Sarah was a flipper and she had sat idle in between deals and got locked up in between draws. But what we did is we started parking her capital in the vault. We borrowed against it for acquisitions and repaid it from profits. But here's the thing, her base cash value never stopped compounding and interest stayed in her entity. Same deals, better cash system. Let me give you another example. There was a physician group. They needed imaging upgrades and a junior partner buy-in. So instead of bank covenants and delays, they used policies and a practice trust to lend internally to each other in the practice. So the payments got recycled back into the practice while their cash value kept compounding. Understand this. This is education, not tax or legal advice. Now, results depend on policy design, state law, and proper trust estate planning. This is not a hack. It's a disciplined system. If the cash flow is tight or debt in your life is chaotic, fix that first. When you're ready, understand this, that structure beats hustle. But when you have structure and hustle, it's unbelievable. If this clicked, here's your next step. Hit the calendar link in the description. Bring rough numbers, income, liquidity goals, all that, and give me 20 minutes, and we'll map out the vault. I can't give all the answers in 20 minutes, but we can get going in the right direction. And we can honestly see if this is for you. This may not be for you. We can talk about trusts and lending rule, all that kind of stuff. I'm not an expert in all of it, but I got a team that is, so we can get you in the right spot. If this is not a fit, I'll tell you, okay? If it is, we'll install a system that helps you keep control, keep compounding, and keep opportunity funded for this generation and your kids. The family or firm that controls the flow of money controls its future. Let us help you build that version.